They don't use any macro at all, but they're still able to be consistent. Um,
I mean, sometimes when I just feel like learning everything, I go all in, I just want
that's
to learn
good.
everything.
That's good. Learn the more you know, the better it is. Always. Um, I'm always a supporter of education. My main business. I guess you could call it my day job. I own a for-profit education company, so I consider myself an educator, and yeah, I think education is the most important thing. That's the best investment you can make for yourself, as in yourself and knowledge. Um, so good for you, man. Good for you.
Like I wanted to just kind of wing it and get experience from practicing,
Oh
kind of
no,
like video games.
no.
But it's hard to constantly practice, so you have to learn instead.
And it's expensive. It's expensive tuition. Ain't that right,
Yeah.
DJT? DJT is an OG when it comes to trading. Ain't that right? Isn't it better to use fake money than real money for tuition?
I'd probably say until you have a extreme grasp on something, that never put like your actual real money into it. And that's not just trading, like literally anything.
Yep. There you go. You heard it from another OG. So, um, there you go. By the way, Matthew, I don't know if you know DJT, but he's like an expert when it comes to sports gambling. He treats sports gambling like I treat trading, like a business. Okay, that's his business. So he's
I didn't even know
he's
that was
a
possible.
yeah, he's an expert when it comes to risk management as well too. So, you know, if you got risk management questions or anything like that, he's a great source too. Um, True OG. I mean, you look at our sports book, man. That dude, oh wow. I mean, those are some returns, man. Those are some returns.
One thing at a time.
Yeah. But I don't know if you're interested in that kind of stuff in sports betting and things like that.
I've never cared for sports, so probably not.
Oh, I see. We got a lot of people in trading and cryptos. They, it's a certain type, right? You can probably tell. Most of the people here
Yeah.
are degens, and there's a certain type that likes this kind of stuff, and a lot of
I
people
mean, I don't
here.
want to gamble, I don't want
Yeah,
to.
yeah, I get it. No, I get it 100%. I think gambling is very stressful myself, but there's a lot of guys here that are into sports betting too. Um, but I think when it comes to sports betting, this man here, DJT, he's king. Nobody knows more than he does when it comes to sports betting here, I think.
Um,
Yeah. So. Oh wow! Look at the markets coming back up. Oh, VIX collapsing. Markets coming up. China coming up too.
I was still wondering with options how basically an option is constantly sold like up until its expiration date.
Hmm.
Um, at some point, doesn't somebody have to exercise it?
If it's in the money, it can
If
only be
it's
exercisable. Well, okay, no, no, no. Let me say that again. If it's an American style option, there's an American style and a European style. Most stocks are American style. So I'm only talking about stock options right now, okay? So
Mhm.
when it comes to stock options, any holder, anybody who owns an option can exercise that option at any time they want. All right.
Right, I get that.
It's just they usually don't if they're not in the money. If they're not in the money, there's no reason to do that. It actually
Yeah.
is a loss if you exercise it if it's not in the money. Um, but have I seen it before? Like out the money options getting exercised? I have. I've seen it before, but super rare. Um, and most options do expire worthless. So only
Somebody just
yeah.
gets screwed, basically.
Yeah, so
Like the
in the
last person to
yeah, so
buy it.
usually it's only in the money options that get exercised. So if you're short an option and you do not want assignment, then yeah, you need to manage that position well before it gets to in the money. In my opinion, you get out before it gets in the money. You get out even before, in my opinion, you get out before it becomes Delta 35. Okay,
Because
yeah.
usually in options, its price is greater than its intrinsic value. if you were to exercise it right then? Because most of the value is extrinsic, right?
Not always.
Not always,
Not
but
always.
for the long ones.
If it's at the money or out the money, yes. If it's deep in the money, sometimes there's like no extrinsic value. And
Okay.
actually, you bring up a very good point. There is a reason why, like some professionals, when they want leverage, they buy deep in the money calls because they're not paying for any extrinsic value. Basically, like for example, like let's say SPY right now is trading at $386. You could buy the 200 strike calls. That's really, really far in the money. And that's like what? You're probably paying like what, $180 for it, about half of what you paid for a SPY share. So that gives you that 1-to-1 delta. So for one, because it's so in the money, its delta is probably 1. So for every $1 move in SPY, you're going to get a $1 move in those calls. So you're basically participating in the upside of SPY while putting up only half the money to get into it. And they use a
Oh, that's
lot of
broken then.
deep in the money calls to do that because there's no extrinsic value. So deep in the money calls sometimes don't have much extrinsic value, and a lot of institutions take advantage of that to get leverage. It's like a
So
free
why
way
would
to get leverage. Yeah, it's like almost a
so
free
why
way.
wouldn't everyone do that if you can pay the same price but get, or if you can pay half the price and get the same upside?
Um, well, it's a lot more risk too. What if it drops below that 200, right? You
Oh,
could
it'll
lose it.
lose value quicker.
Well, yeah, of course. So
Okay,
it's
I see.
leverage. So it's 1-to-1, right? So,
Yeah, okay,
so
I don't get it fully.
well,
No, I get it though.
yeah. So yeah, exactly. So it's 1-to-1. So if it goes down by $1, it will go, your $180 call will also go down by $1. So that's a bigger percentage move. So the risk is higher. Um, so it's a leveraged play, but that's one way of getting quote unquote free
Oh,
leverage.
right. It'll go down twice as fast too.
Exactly.
Right,
It
yeah,
goes
that's how
twice as fast or up, or twice as down faster. And if it closes below that 200, it goes worthless. So there's that added risk there too. Um, so that's why when institutions do this, they go really far in the money. They don't want a chance of this going worthless. So they go really far down. So sometimes when you see SPY, like sometimes you see these like strike 180s, 190s getting traded. That's basically an institution like taking on a leveraged bet on the direction of SPY.
But can't you just put in twice as much money and that's like the same thing?
I mean, yeah, but why do that? Why commit twice as much capital, right?
I guess so.
Yeah, that's how hedge funds beat the market. They use leverage. So if you're doing the same trades as everybody else, you're not beating the market. An order way to beat the market is you use either option strategies to leverage or you borrow money to leverage. Unfortunately, a lot of hedge funds go with the second. They'll borrow massive amounts of money to leverage. That's what's happening in the crypto market right now with 3AC going down and everything. So, you know, um, that just
Yeah,
tells you how
borrowing.
smart. Yeah, that just tells you how smart these hedge funds are. They're not really that smart. They just have access to a lot of credit.
That's how things go bad,
Yeah,
right?
whether
Borrowing.
it's right or wrong, I mean this is not a class on morality. It just is what it is. Hedge funds just have access to large amounts of credit. But that's good, man. I mean, just a couple days ago, you didn't know like what a call or a put was, and now you're talking about intrinsic, extrinsic, and now talking strategies with me. Good for you, man.
I don't know about talking strategies, but
I mean, you're
I'm
able to
starting.
hold your own.
I
You're
got
able
the
to hold your own.
basics
Yeah,
based
you're
on that video.
good.
But
You're
it's pretty damn complicated. There's so many like inverses and
yeah.
opposites.
And I'm just gonna give you a little bit of warning, just like from some of these like basics videos. Like I get it. Like some of these like basics videos try to make it as easy as possible, but I really think that you have to have a very rigorous understanding, like kind of a mathematical idea of
Oh,
what
I'm
you're
a super
doing.
math person,
Oh, very
but
good, very good. Yeah, you need to have that because once options seem easy, that's usually when there's problems because it shouldn't be. It shouldn't be easy at all. Um, when somebody says, "Oh, this video made it sound easy," it's just kind of like, well,
I
it
mean,
shouldn't be because it's
I
a very dynamic system.
I caught like a glimpse of like a super complex formula I saw for like deriving the value of
The
options.
value, the Black-Scholes, right? That's what I was talking about in that, and mine too. The
I
Black-Scholes
think
model.
so,
Yeah,
but it was like there's a lot of variables.
yeah. There's a lot of derivation, and you need to know something called Ito's calculus, or they call it stochastic calculus. Um,
What is that?
but yeah, the stochastic calculus is just it's just solving equations that have lots of random variables in them. And so, usually that's how the Black-Scholes Merton model was derived. Now, you don't have to derive it yourself. You can actually go on your brokerage. I don't know if Thinkorswim offers it to you in your limited data package, but they should give you the theoretical value of each option. They do for me. I can look up the theoretical values, the Black-Scholes, there's the Bjerksen model. There's also something called there's another one. There's like 3 or 4 different models that you can choose from, and you can choose theoretical values based on that. So you don't really have to know and derive it yourself because most brokerages now give you that for free in real time. But it is a good idea to know just so that if you see certain opportunities, you can jump on them. Like, for example, GameStop last year, huge opportunity for arbitrage. If you knew arbitrage strategies based on Black-Scholes Merton, you could have made free money. There were like weeks at a time you could have made a free 2 to 5%, like risk-free 2 to 5% a week for like 3 weeks straight, which is pretty good. I mean, I don't know. You guys are probably laughing at 2 or 3%, but imagine making 2 or 3% a week risk-free. No matter what GameStop did, you were going to make your 2 or 3% guaranteed. That's the type of power you can have if you understand these mathematical models. But those opportunities are super rare. They're super rare. So, you're not really missing out on much.
There's so much.
Oh yeah. And then once we start talking about strategies and spreads, I mean, that's like an infinite discussion right there. I mean, even within options, just the talking about spreads is like an infinite subject by itself.
What is a spread again?
Spread is when you use multiple option expirations and legs for one position. So rather than just buying one option, you're buying like 2, 3, 4, even up to 6, 8 different options for a position.
And can that be like advantageous?
Risk management and predictability of returns. So let's say like the vertical debit spread that we've been using for the past few weeks in our positions. You're buying one that's closer to in the money and selling one that's further out the money. So it limits your premium. So you're spending less premium on that position, and it's hedged. And if it takes a little bit longer time for you to be right, well, then you're not facing all that full implied volatility crush. Some of that implied volatility you're actually gaining on because you have a short strike. So you have one strike that's losing implied volatility. Here, look at my screen.
I can't get it. I have to like understand everything to get it.
Yeah. So, like for example, this one right here. I'm long this one. I'm long the 15 strike, right? This one with the green and red, and I'm short this one. Okay. So this decayed faster than this. I'm long this strike, but I'm short this strike. So overall, I'm bullish on this UVXY. But even though the price has gone against me, I'm actually still ahead on my position because of the skew. The implied volatility when I first bought it was way higher on here, and there was a 10-point differential. So this strike decayed faster than this did. And so that's why I'm able to profit still on this spread, even though price has gone against me, even though
So
I'm
you couldn't
bullish.
lose?
No, it's not that. It's just I'm just stacking more of the odds in my favor. I'm just using
But
math to stack the odds in my favor.
you said the price went against you, right?
The underlying UVXY went down, even though I'm betting for it to go up. Not by much,
But
but
you said you still are on top, right? You said you
yeah,
still
I'm still
gained.
on exactly, and it's because I used skew to my advantage, and this decayed faster than this did. I used a spread to counteract the
So
implied
did you
volatility
know?
crush that I knew we were going to face.
Did you know ahead of time, like how fast it was gonna decay?
No, nobody knows ahead of time. Nobody knows
Okay, I
anything
see.
ahead
That's
of
where the
time.
risk is then. Okay,
Yeah,
I
yeah,
see.
yeah, yeah. Of course. Nobody knows anything ahead of time. Anybody who says they know exactly what's going to happen in a week, a month, or whatever is lying to you or they're crazy. Nobody
Okay.
knows. I always say this. The
I thought you knew
future,
from.
no, 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 no. The future is a range of possibilities. Okay. And you're just
I
trying
agree.
to navigate and manage your risk as a trader. Okay. There's no crystal ball, no matter what anybody says. Nobody knows. Okay. So it's all about managing your risk in the end. That's what wins in this business, risk management. All right. Ain't that right, DJT? Ain't it all about risk management?
I mean, I guess the basic thing, whether it's with trading or anything, is like when you really want to make money at something, you get less focused on how much money you can make and significantly more focused on how bad can this screw me, right? And once your mindset gets to that point of I'm trying to get this much in gains or I want to make this much money, and it's okay, if I'm wrong, which is going to happen, if I'm wrong, I'm only losing this much. Cool.
Boom.
Well,
That's the mindset of risk management right
the
there.
same thing as thinking everything in percentages, right? It's like, y- yeah, everything in percentages and your potential upside and your potential downside.
Yeah, I mean, percentages makes the most sense because, I mean, 1% of my sportsbook balance is significantly more than likely somebody else's 1%. So I don't want to lose 1%. That's a lot of money. And what you find is the more you make and the more assets you have, what you're willing on a business venture, you want to be an angel investor for a company or just on day-to-day stuff, the amount you're willing to risk starts getting less and less of your total net worth because at that point, I don't need 6% gains. I don't. I certainly don't want 1% losses, though. That's a lot of money at this
Well,
point.
it's like, say you can lose 1%, but like, what are the chances that you lose 1% multiple times in a row without also gaining 1% in between? It's like,
But I don't need to gain anything. I just need to make sure that I keep what I have because covered calls, if we're talking market, covered calls, dividends, that's capital appreciation right there, let alone with the asset value. I just don't want to lose. I don't want to put myself in a position where even 1% or 0.5% or 0.25% of what I'm doing, whether it's a business transaction, sportsbook, market, I don't want to lose. I want to lose as little possible because I know if I do that consistently, everything else I have going for me is going to get me where I need to be. I just don't want to take a hit.
That is when your trajectory and your equity curve changes. When you actually start understanding that it's not about the gains, it's about limiting your losses. And that changed my trajectory. I mean, once I stopped thinking about the gains and once I really focused on not having losses, that's when your money starts compounding and that's when your account actually grows faster. I know it's counterintuitive to think that way, but you have to think that way if you want your money to compound. Time becomes your friend when you're compounding, but when you're not compounding, time is your enemy. So, in order for your account to compound, you need to limit your losses.
I mean, I just needed to understand the basics still. So
Yeah, but that's just like the psychological mindset, and like also the like kind of portfolio management kind of bird's eye view of how you should be thinking about your portfolio. Yeah.
like I think I'm pretty disciplined, so I don't think that'll really be a problem. Like I'd never go all in or
I used to say that to myself too when I first traded. Like, I remember I said, I'm never going to go all in. I went all in on Bitcoin. Actually, that helped me start my bankroll. I went all in on Bitcoin when I was broke. I put
well,
like,
when you're small,
I
then you
went-
can you have to take more risks, right? To grow.
I don't know. That's a good question. Actually, at the end of this year, I don't know if you were here for this, but last week I announced that hopefully by the end of this year, early next year, I'm going to start a $10,000 account and I'm going to trade live on that, like 24/7 on Twitch.
That sounds good.
So we'll put some theories to the test. We're gonna put some theories to the test with that. It'll be a good experimentation. We're gonna do the 10K challenge because on Twitter I saw this thing. What got me the idea of doing this was on Twitter. There was this dude who's doing a 500 challenge. It's 500 to 50K challenge. That was like a thing 2 or 3 years ago. There's not a lot of people who do that now. I guess a lot of them just blew up their accounts, and also too the market condition that we're in, it's not good for that. But so anyway, there was this 500 to 50K challenge, so that's like a 100 time increase, right? And people are trying to do that in a year. That was like a thing on Twitter for a couple of years. So I think I'm gonna try that, but instead of 500, I'm gonna start at 10K. So we're gonna try to do 10K to a mil. I don't know if that's going to happen in a year. That's just stupid. To me, that sounds really stupid, but we'll see. We will take a vote to see what kind of strategies we want to do. Do we want to do day trading active strategies, or do we want to do like these like leaning in on like longer term strategies? You know, we'll take a vote and consensus. I kind of think like we're probably going to go toward day trading strategies. Just because of the people that we have, but yeah, we're gonna do that live, and hopefully I can get that set up by the end of the year, early next year. I'm trying to get an institutional account for that, like not an institutional account, but a business account for that, just because I know the security is just a little bit better on business accounts, because I will be showing like actual position sizing and. You know, I think those are security questions on personal accounts. So, yeah.
With that mindset though, like it's real easy to stray from. I'm not gonna go outside of these parameters that I've been using, whether it's whatever sizing or risk management. It's super hard to get outside of, or say that you're not going to get outside of that when you have multiple even days, weeks, months of successful trades or bets. And, you know, parties like, well, why would I not just scale it up? Like if I would have scaled it.
Lucky. I mean,
100%. No, you know what DJT is saying right now is the reason why I lost my first 7 figures. It's exactly what DJT is saying is right now is exactly how I lost my first big pot of money. So that definitely resonates.
Yeah.
And,
Yeah.
I get what you're saying.
I did that in 2014.
Like,
Yeah.
Yeah.
I was betting, started off reasonable size for my bankroll, and I didn't lose for like 6.5 weeks. In between there, I lost maybe a total of $8,000 in that 6 weeks, but my like net profit was nearing 250,000. And the longer the ride continued, my bet sizes increased until
percentage-wise?
until I got to a point where I was like, fuck it, like I'm just the best. And then when you lose on one single decision over $100,000, you start to reassess.
You mean your percentage of your like total capital was increasing?
Yeah, significantly.
Yeah.
Up to a point where if I was staying regimented, I would have lost 25,000. Instead,
And
I
then you
lost.
would have made it back over time, right? Because if you have a winning strategy, then
Right.
over time you'll make it back.
But instead of losing 25,000, I lost 176,000.
Yeah.
But you're able to make it back, right? Eventually.
I mean, it depends on the person. If you get in that mentality and you take a nearly $200,000 downswing, and you have some other stuff going on in your life, which my buddies, I've seen it firsthand, like smart dudes, sharp cats, take a big loss that shouldn't have been in anyway, and then chase it by going even bigger, and then you hit a downswing, and you're asking to borrow money, right?
Mm-hmm. No, it's just discipline.
Yeah, it really is all about discipline. That's what happened to me too. I took way too large of a bet, way too large, and then I kept and then because it hurt, I kept adding to it like an idiot, and that's
I was trying to think of what's like a solid percentage to be willing to lose in one stock. Because if you have like 10 stocks, which is pretty low, then the most one's gonna go down. Like, what's the worst you guys have seen one of your stocks, if you guys had stocks go down in like one day?
I mean, the S&P 500 in 2020 went down by 7 or 8% and broke circuit breakers before. So, I mean, I guess
Okay, so that's pretty low actually.
that's pretty. I mean, I've seen other things too. Like, well, I mean, for most people, like, especially like you're talking to like me and DJT. I mean, most of my holdings is SPY, as S&P 500 index funds. We don't take individual
I'm talking about
corporate
like
risks.
super volatiles.
No, dude, no. That's like there is no. I mean, I know some people who get lucky and they're able to make their initial fortune with that, but it's not like it's not a sustainable strategy for building wealth. It's just not. I mean, if you're able to use it to get lucky and grow your initial bankroll from it, more power to you. And I did that too myself. One of my first initial bankrolls I made off of some tiny ass like biotech stock, bro. And like, yeah, I mean, even
When was that? How long was?
that was like back in 2015.
Oh damn! So biotech has been going for a while then.
No, hey, no. All those strategies that you think of, like penny stock trading and all this, they've been talking about that for over 100 years.
Yeah, that makes sense.
Yeah. Jesse Livermore even talked about penny stocks, and he wrote in the back in the 1920s. So, yeah, they say speculation is as old as the hills. There's nothing new in Wall Street. Okay, even in Wall Street, that's what Wall Street people tell themselves. There's no such thing as a new thing in Wall Street.
There is.
What? What's the new thing in Wall Street?
Online brokerages.
No, that's the
way
same
more
thing.
people are
It's
involved.
speculation. Just a better way to
No, but
speculate.
way more people are involved.
Yes, so that's nothing different. It's just still speculation. It's
The
still
online
animal
brokerage-
spirits. Yeah.
Online brokerage is the exact same thing as what I had to do in 1997 to buy a share. It's just taking out me calling somebody to do it for me.
Yeah.
Exact same thing.
Oh, it's a progression then. It's not new in the sense that it's like, progression, but it's
not
still
new.
kinda
There's
new.
nothing new. I'll say I worked in Wall Street. I was an institutional trader, and we always used to say that there's nothing new. Nothing ever new happens in Wall Street. It's always the same thing. Fortunes get made, fortunes get lost. Somebody's jumping out of a building because of a bad decision. Nothing new. That's a Tuesday, okay? It's just nothing new. It happens all the time.
Yeah, another reason to take a lot of risk when you have a small account is if you have an income, then you can afford the risk because you can just keep pumping it until you get lucky, right?
I mean,
Oh,
it has to be a
once you can,
calculated risk. I mean, I do agree that you may have to like lean into a trade if you're smaller, but most people are impatient about which trade they take to lean on. You really have to be super patient. In my opinion, if you want to grow a small account to a big account, you have to be very judicious on which trades you take, uh, and you really have to stack the odds in your favor. Um, and hopefully, I get to show you
and that's
guys that.
anything.
Well, yeah, but I mean,
That's
but you have to be
anything.
even more so. Like when you're small, you have to be even more so. I think once you get to
I
a bigger
mean,
account, then you can start spreading your bets out and doing like different types of position sizing and this and that, and start venturing into other strategies. But when you got a low bankroll, you got to stick to like it's kind of like Vegas, like trying to build up a bankroll in Vegas. You got to stick to your one or two games where you have your biggest edge and really try to capitalize on the best moment when you got like some drunk idiots like rolling on the tables. That's when you really want to strike, and it's kind of like that. You have to really pick and choose your opportunities when you're small to make that initial bankroll, and then when the opportunity is right, that's when you strike. Hopefully end of this year, early next year, I can start that account and I can show you guys what I mean by that.
I mean, I just like consistency, so that's why I like penny stocks because anyone can buy penny stocks. Because as a
That's
small,
not consistency, brother. that's
or if that's not, then nothing will be because
well,
with a small account, you cannot buy big stocks. It's just how it is.
you can buy spreads into a big stock. You know, some of those
Well,
spreads that I got into, they're only like 100, $200 a piece.
like if you do have a smaller account, then why are you buying multiple different stocks
Yeah.
and to get
Because
10
I
things?
still want it to be a consistent strategy. I don't want to go all in because that will not work over time.
But if you only have to get one thing right, whether it's a spread or you caught a momentum stock that's got a low float, I mean, whatever, like there's a lot of different ways to go about it. But if you have a stop loss in there, you already know what potentially the most you're going to lose. And so why would you have to get 10 stocks? Maybe you're right on 6, so it nets out slightly
Because
instead of just one. And then when you're right, you're right.
because these stocks can go down like 20% in one night, and the stop loss won't prevent that.
Right, exactly. So what DJT is saying is basically don't if you got a low bankroll, why would you even participate in penny stock market to begin with? You
Because they
know.
have high upside,
See,
and
that's
because
it.
you can.
That's the gambling mentality right there. So you're thinking about the
But it's not
upside before the
about
risk.
everything is a gamble, but it's about
You know.
percentage.
Well, okay, stick with us for a while, and I think you'll learn. I think 6 months to a year from now, hopefully, remember this conversation. Hopefully, your opinions change. Um, but yeah, but if you want to last in this business, you really got to think about your downside first before your upside. Uh, that actually helps your upside actually when you're limiting like how many losses you take on. Um, with penny stocks, like you said, there's no way to limit. Sometimes there's no way to limit your losses. So, you know, that's why most people, most institutions, most pros don't get involved
Well, you
with
can
penny
limit
stocks.
your lot. You can only lose how much you put in. So that's why if you put into multiple stocks, then you're kind of limiting your losses.
Yeah, but the whole penny stock market could just crash like SPACs did last year. All SPACs just like went down 80%. You could have bought 10 different SPACs, but they all went down
What's a
80%.
SPAC?
The special purpose acquisition company, like those. It's like today's version of penny stocks, bro. It's like
Is that a stock or
SPAC is types of stocks. It's those high risk names like what was one of them?
so it's a type of penny stock?
No, like Virgin Galactic was a SPAC. all those crypto stocks, those high growth,
I don't know.
low market cap stocks.
It's a way that the actual company acquires funding to go public.
Yeah. So last year and the year before, the penny stock craze was towards SPACs. It was toward these like special companies, these special purpose acquisition companies.
Like Lemonade, DraftKings.
Yeah, Lemonade, DraftKings, Virgin Galactic. Yeah, those are the big ones that came out. But there was a lot of them. SoFi was one of them, right? Marijuana
All I know,
companies. Yeah.
everything I do, I get good at. So if I'm wrong, it doesn't matter. I'll just learn.
Very good. That's a good mentality. That's healthy. Okay. All right, guys. I have to. I'm gonna have to log off here, but I will be back for end of day, and maybe we go over positions if I add to them. I don't think I'm gonna add anything today, just because tomorrow CPI report. DJT, I think you're right. I think we're gonna see that 8.8. I think we're gonna see that 8.8.
I'm not higher, bro.
You think it's gonna be higher than 8.8?
I don't know. Just because even though that's a percentage higher than the last one, well, 2 basis points higher. But anyway, I don't know why. Like, why is the White House secretary saying that they expect a higher inflation than normal? And to me, like, that being released doesn't merit not touching 9 on the headline.
Headline 9. That would be crazy. Okay, that would be some crazy. That would be crazy if we saw headline 9.
I don't know. I think there's like a sub 10% chance that it's same or lower, and 90% that it's higher.
Wow. Okay. Wow. Crazy. Okay. Well, definitely we'll look out for that. But I do think. But in your modeling, do you see like September or October, we getting cooler numbers? Because usually that's the lag. The lag is around 3 months.
Yeah, I think we'll see at least sub 8.5 in October, and then probably a continued downtrend until, I don't know.
Wow. So even in October, you see it as 8.5 in October?
It could be slightly lower, but that's where higher this month, same or higher next month, slightly lower, and then maybe we'll start seeing 8.4 core start getting down closer to 5. But either way, it's lag data, and so if the Fed continues tightening the money supply, which by all accounts is what they're going to do, then the data set that their other dual mandate has, which is employment, they're not going to react fast enough by the time that side gets wrecked, and then they're going to react too fast, and then inflation's going to come back, right?
Right, just like this back in the 70s, exactly like the 70s, yeah. That's what I'm expecting, but I was actually thinking that we might see like a print like 5s and 6s in September or October. You don't see that happening, huh?
On headline?
Yeah.
No way, bro. Like, that's super optimistic.
Okay, never mind then. Okay, maybe not. I mean, it's just from like if you take the average, like, the drop in crude, the drop in like corn. I mean, corn is like 30%. Grains are like 30% lower now than where they were like a month or two ago. So, no, you still don't think so?
I just think that
Too optimistic.
that's super aggressive, because while in theory gasoline's going to be lower in the next coming months, right? Like, energy prices are going to continue to rise, like for like heating, utilities. Supply chains are still where they're at, even though some of the materials pricings tapered slightly. But what happens when the supply chains are still constrained, and then we get head faked and demand increases?
That's true too. That's true. That I'm also assuming that supply chain will the bottlenecks will ease up in the next, I guess, soon, within the next few weeks. But if that doesn't happen, you're right. It won't go down that much.
Where do you guys get all this info you're talking about?
Say it again.
Where do you guys get all this info that you're talking about? All these stats and
Life experience, bro.
Well, not just that, but I also track freight rates. So freight rates have been going down, and usually when freight rates start going down, your cost of goods, because we're an importing nation, starts coming down. And so I've been looking at significant drops in freight rates, and usually like freight rates dropping, usually within a month or two, we start seeing inflation like really drop really quickly. So that's why I'm getting that aggressive on that. But maybe I'm wrong. It could be wrong.
Here's the counterpoint, right? Is the one thing that I've been looking that's got pretty linear and direct correlation with inflation is look at consumer savings. More importantly, consumer credit usage, which has continued to rise month over month, meaning demand, even though rates are going up, is not slowing. People are spending the exact same amount they were, even though it's not from their bank account, they're putting on a credit card, which means we're still buying as much, if not more. And that's going to be,
I see,
telling, 12, 15, 18 months when, wow, now my credit card bill is where it is and student loan forbearance is no longer, and I've got an extra $600 a month that I didn't anticipate. Like, at that point, cool, yeah, I could see the demand slowing because people are just going to be broke.
I see. So you're saying that there's no demand destruction yet, and that is true. Spending is still quite high. I think I saw that credit card data you were looking at, and it's still like it hasn't like topped off at all. Interesting. So if it were to top off at the end of this month, though, that means for October reading it's possible. So maybe September is a little bit too aggressive. Maybe October, November. Maybe then that's when we see it kind of fall. Okay.
And then what happens in credit card usage in December?
Right.
Christmas.
Right. Right. And so either we're gonna be at the tail end of the spending spree, and it's gonna be like the best Christmas ever in spending, or we're gonna top out sooner, and this will be one of the worst Christmas spending. So it's either gonna be really good or really bad. I don't think it's gonna be a in between number in that case.
And it depends if the Fed continues with their hawkish stance, right? If they do, then I don't know, maybe a trade prior to Black Friday is try to get short some of the retailers because they're going to get.
Yeah. And we could actually that could like defoil the Santa rally. Everybody like gets long for the Santa rally and it just drops. That'd be interesting. I can see that happening. Okay. All right. Year end. All right. Something to look forward to. Year end, possible short retail. Okay. I can get behind that. It sounds like a good idea, actually. If retail sales keep going up, what's XRT doing right now?
Or maybe the kind of next level 4D chess play is short retail in February when the January returns hit bottom line. Right?
When the January returns hit? What does that
mean?
Yep.
So when people are returning all the shit that they didn't fit or
I see.
Because that's revenue that's accounted for. Then finally gets knocked off the books January, February.
That's forward looking. So we would probably need to short around October, November if we see a spike. So if we see a spike in XRT, let's say theoretically it gets up to like $90, I would think that would be a decent short.
For like a March expiration or April maybe.
Yeah. Maybe even up to June. If you do it in November, June gives you 7 months. So or May, June. Actually, how far does the option chain go for XRT?
And then just like some of the data points to look at would be payrolls, unemployment, continuing claims. If retail's still strong, then it's likely to get wrecked.
Yeah.
Q1.
You know what? I like that. I really like that play. I like that. I was anticipating far ahead of time. I like plays like that where we could see it like months away and we could plan. I like this. I like that play a lot. I might share that one with the crew. All right, on the
I don't.
high noon highlights.
I'm just talking.
Yeah, but I like that. If retail does well the next 2 quarters and can get up to like 90 by like November, we short. We short that and we see it retrace back down to 60. I like that. I like that play. I really like that. Actually, what's consumer discretionary? What's the consumer discretionary ETF? Hold on.
See, the only thing that could screw us is if earnings guidance is significantly lower, just so that they can not miss.
That's
right?
but that's what I think is going to happen this quarter. But I think they're going to guide it lower this quarter. Everybody's going to guide lower. Like it's the perfect excuse for it, and also too the September options award for CEOs. This is like the perfect time to do it. So I think they're going to guide lower here, but
I mean, there's really no reason not to because everybody else is doing it.
Yeah. And the dollar is up and the market is down and there's all this recession fear. This is like the perfect time to say you're not going to do well, to keep those hurdles as low as possible. Like this is the best time to do it, in my opinion. Like the payout structure, the incentive structure, the where we are in the markets and the economy. I mean, this is like the best. This is like the best excuse to do it. But XLY, consumer discretionary, I think is another one too we could do. XLY's got Amazon, right? Yeah. So you get to play some of that. Ooh, 190. So that's 190. Okay. So if XLY comes to 190 and it drops.
And here's the other thing too, is if across the board they're guiding lower, then I would imagine that the analyst revaluations and price cuts are at worst going to go from buy to hold, right? So it's going to be less of a market implication or expectation from there, since it's like, all right, well, this makes sense. We're guiding lower. Here's why. There's no more stimulus checks. There's this and this and this. And then eventually consumer credit's going to catch up, especially when student loan deferral ends in October. Maybe.
So now it's a matter of, do we choose XRT or do we choose XLY to do this? I'm going to have to look at the components and see. What are your thoughts? Which one would you short? Would you like after a run up? XLY or XRT? Or neither?
Probably the retailers.
The RT, XRT? Okay.
And the only reason for that is, like, regardless of balance sheet, profit and loss, guidance, companies that, like Amazon, similarly to after we were running back up from the COVID lows, how basically Tesla held up the S&P single-handedly.
Right.
I could see Amazon doing that.
Oh, Amazon just holding it up? Oh, dude, Tesla. So Amazon, Tesla, HD are the top 3 holdings for XLY. Okay. Because Amazon could hold it up. I see. And Tesla, too. Tesla could do well next year, actually.
And so that would be the only hesitation there, is you get two stock up the whole index just because of the market cap, right?
40%. It's 40% of that XRT. So yeah, 40% stays high, then it's gonna stay high. Yeah, you're right.
Or it maybe not even stay high, but it's just not going to get crushed. Like, but who knows, right?
Actually, you know what? I like this better. The XRT is a lot more diversified. Like the biggest holding is 1.69. It's Chewy, 1.69%. Everything is like in the 1% range, 1.2 to 1.6. The big holdings. I like this better. Less concentration. You know what? Let's go with XRT. So XRT. Okay, so we're gonna. Oh man, this is exciting. This is exciting. This is a new play. So we wait for like a couple of good quarters. Like, they're gonna revise down. This is gonna go down. It's gonna come back up. Right here, we short the shit out of it. Right here. All right.
And then that's assuming consumer savings continues to decrease, which it will.
Yeah, it will.
Credit continues to increase, which it will. And that's not even for the holiday season. That's just cost of being alive. If you don't have cash flow, is credit, right?
Yeah.
And then the Fed continuing to raise the Fed funds rate, which when the APR or APY changes on the yearly for their credit cards now, hey, your 24 point whatever is now 28. It's just going to compound, bro.
Right. And not only that, when inflation comes back, spending is going to get hit. And then they're going to talk about the federal budget deficit. And then they're going to talk about like the fears of raising taxes. And that's really what's going to cause the next sell-off in 2024, in my opinion. And that's going to be forward-looking. So when tax expectations are going up, people's pockets are going to get hit even more. Yes.
And that's not even bringing in potential unemployment, mass unemployment.
Yeah, exactly. If unemployment starts ticking higher, because it's been ticking lower, we haven't had unemployment go up. So once that goes up, this is going to fall. So, okay, I like this. If this comes to 90, I like it as a short. I like that.
I mean, there's a lot of things that are pushing against it that I haven't heard anybody talk about, right?
Yeah. Oh, man. Yeah, and look at that. Look at these implied volatility. So low. And the skew is right, even for 6 months away. So by that time, hopefully by that time in November, we'll have some June expirations. And if it keeps that same kind of 7 months skew, that would be perfect. Buy put spreads and just wait like a couple months, wait for the fireworks. I like this. This is going to be our new long-term play.
Nice.
I like this.
All right. I got some studying to do. I'll talk to you guys tomorrow, all right?
All right. Yeah, tomorrow it is. Yes. That was a good session. Okay. Yeah, I got to leave too. Okay. I'll be back at the end of the day today, but I'll leave the Twitch streams and everything up. Okay, guys. See you guys later today.
Later.